Hi, I'm Sandy Ray, founder of Sandra E. Ray CPA, where we alleviate financial headaches so that you can create a bigger impact. Today, we're going to talk about how to record your non-cash donations for your silent auctions, your live auctions, and other fundraising events. There's so much to keep in mind when you're planning those fundraising events. There's a few things that need to be done so that we have all of the information that we need for compliance reports and our own internal reporting so that we know how successful our event was financially. So if you're planning to have an auction, a raffle, or even a bingo at your event, there's several things that you need to take into account and that I would like you to add to your checklist. And if you do these things, you'll have all the information that you need to know when the event is over. The first one I want to talk to you about is charitable solicitation registration. We've talked a lot about that in the past, but this is specifically how it relates to these fundraising events. What does your state where you're having this event require you to do in order to register this event with them? Are you using a professional fundraiser? And how does that change the requirements for your state? You need to look that up. The second state requirement I want you to look into is your charitable gaming. If you're doing something like a raffle or a bingo, which most states consider charitable gaming, or even a casino night, what do you have to do to register for that? Is there a license? Is there a fee that goes along with that? And is there reporting on the backside that you need to do? Another thing that we don't think about a lot of times with fundraising events is sales tax. But if we're having an auction or a raffle where someone is receiving something and they're basically making a purchase to receive that item, the states look at that as like a retail transaction. And many states require that you collect and remit sales tax. Now, there are exceptions and exemptions for maybe one-time type of thing. So you need to go look at your state regulations as it regards to sales tax. One thing I want to talk about is like an internal policy, and that's our gift acceptance policy. As we're going out to get these items for our silent auctions, for our live auctions, for our raffles, we expect that most of these prizes and awards will be donated. So when we're searching for these types of things from our donors, we want to make sure that our donors understand what we will accept and what we will not accept. We don't want to accept something that comes with a significant handling cost. Maybe there's an appraisal that's involved, or maybe the item requires a certain temperature or some other special handling items that we just don't want to be dealing with at our auctions. And then, of course, finally, we've got the IRS requirements. As you know, all donations, cash and non-cash, of $250 or more require an acknowledgement from the charity before the taxpayer can claim the deduction on their income tax return. So one of the big things is we need to remind the donors who make those winning bids, or with a raffle, if they are awarded a prize, if they've paid for a raffle ticket, they only get to claim the difference between what they paid and the fair market value of the item. So if somebody bids $250 on a $100 gift certificate, they only get a $150 deductible donation because they received something in return. So we want to make sure that donors understand that, and that our donor acknowledgement has that quid pro quo language in it and mentions the amount of the fair market value. Another way that you can make sure that donors know what the fair market value of those items are is to prepare a catalog ahead of time of the items to be auctioned off with those values, or maybe on your bid sheets, if you have a silent auction, you can indicate what the fair market value is along with what your minimum bid requirement is going to be. Then there are the donors who provide the items for our auctions and our raffles. These donors, again, need an acknowledgement. They have made a tax-deductible contribution, a non-cash contribution, and with non-cash contributions, we do not put the value of the item in the acknowledgement letter. We only describe what the item is that we received. Donors of non-cash contributions many times can only deduct the cost that they paid for it and not the fair market value. So they're going to have to work that out with their tax advisor, but they have a receipt from you saying that they did donate that item. And then one thing we usually don't talk about with fundraising events is unrelated business income. Because unrelated business income is generally not only is it not related to the exempt purpose, which can include fundraising, but it has to be carried on regularly. So if you're having a silent auction, which would compete with an auction house, and you're doing that on a regular basis, say on a website, you are probably going to be subject to unrelated business income tax, and you're going to need to be tracking that information. Any net proceeds over $1,000, you're going to end up paying the UBIT tax. But no matter what, you're going to have to file the 990T, whether the tax is due or not. So generally a once or twice a year type of auction or raffle, you're fine. But if you're doing that continuously, you need to look in the requirements for UBIT. Now, we've kind of talked about all of the things that you need to look at and be aware of and incorporate into your planning. Let's talk about the nuts and bolts of how you're actually going to be recording this in your accounting system. Let's start with those donated items for the auction. You need to first determine the fair market value of each item, and then we're going to record that in our accounting system. And that recording is going to be a debit to inventory of auction items. Generally, that's going to be an asset. It could be a suspense account. And we're going to debit that account for the fair market value of the auction item that we received. We're going to record a credit for the corresponding amount to in-kind auction item donations. And again, this is an income account on the statement of activity. And again, all that we talked about the donor acknowledgements need to go out. Now, if you're purchasing items for your auction or your raffle, that's pretty simple. We're going to debit our inventory of auction items, and then we're going to credit our cash and our credit card. So now we've got all of our auction items recorded. They're in that inventory of auction item account. We've had our event. We've tallied up what we've gotten. And for each auction item, we need to determine who the winning bid is. And if the winning bid is more than the fair market value of the item that was received, this is the transaction that we're going to do. We're going to debit our cash for the amount of the winning bid. Then you're going to credit your inventory for auction item for the fair market value of the auction item. And the difference we're going to credit to silent auction income. So total winning bid is like broken up into two income items. The non-cash donation, which goes to the donor who donated that, and then the difference is the cash donation to the winning bidder. Now, if the winning bid is less than the fair market value, we're going to actually be debiting our silent auction income and reducing it. That's the only difference in that entry. And again, we're going to be acknowledging to those donors who won with the quid pro quo language and the amount of the fair market value of that item. Now, for the raffles and our bingos, it's slightly different. Again, the donated items, the purchase items, they're handled the same way. We're going to put them into that inventory account. We're going to recognize the revenue, or we're going to show that we paid it with cash or credit card. And then after the bingo or the raffle is completed, we're going to determine the gross proceeds. We're going to debit our cash for the gross proceeds of the event. We're going to credit our inventory for the fair market value of the item or items that were awarded And the difference is going to go to our bingo and or raffle income on our income or statement of activity. Now, when recording these transactions, there's a couple of things that you need to keep in mind. The first is the year of the receipt versus the year of the event. If you're receiving items in a year that's different than the year of your event, you definitely want to make sure that inventory account that we talked about is an asset account, and we're carrying it on our statement of financial position. If everything happens within the same year, it could be a suspense account pretty much anywhere in your accounting records, because the debits and the credits are going to zero out at the end of the event. The other thing that we want to track our information is by event. You need a way to tag each event separately, because for our 990s and our charitable gaming and our registration with the state, those reports generally have to be conducted by event. So if you're going to have more than one silent auction during the year, you need to make sure that you know what the activity was for each auction. There's just so much to do when having a special event and raising money for your organization. So you need to take time to plan that you have all of the information that you need when the event is over. Not only do you need to properly report on the Form 990 or 990T or other state compliance reports, but you need to be able to gauge the success of each activity in the event and the event overall. And we want to help you simplify this so that you can just look at your accounting records and do that. I hope this was helpful for you today. Thank you for joining me. And remember, creating a bigger impact starts with stopping the nonsense. If you're dealing with nonsense in your nonprofit organization, we'd love to help you cut through the noise.